Okay, grade 11s, I welcome you once again. We are looking at this question, and then the topic that you are actually looking at the present moment is the partnerships. Okay, so the requirements of this question, they are saying calculate the correct net profit, and we are also being required to prepare the following accounts in the ledger for the financial year ended 28 February 2021. The current account for Gray, the current account for Simon, and also the appropriation account. Okay, so I'm going to start by doing the current accounts and the appropriation account also together. I'll just do it also with the calculation of the correct net profit, because we do need the net profit in order for us to do the current accounts and also to do the appropriation account. Okay, so let's start with our current accounts. Okay, let's start with our current accounts. We have got two partners, Gray and Simon, and then we'll also do the appropriation account. Okay, current account, this one is for Gray, and then current account, this one is for Simon. And then on this side we are going to do our appropriation account. Okay, and then here we're also going to do the calculation of the correct net profit. Okay, so this is all that we are going to do. Okay, fine. So we are going to start by looking at the current account. Okay, fine. I want you to master the current accounts. Okay, fine. When you look at the information that is supposed to be recorded in the current account, you find out that, okay, from the information that we have here, we actually do have the opening balances that are given on the 1 March 2020. There is a favorable and unfavorable balance. Okay, that is fine. And another thing that we need to remember is that current accounts are part of the owner's equity. So if anything, if the current accounts are part of the owner's equity, we should understand that, okay, fine, owner's equity increases on the credit side, and then it also decreases on the debit side. So I'm going to indicate on my ledger accounts plus, minus, plus, and minus. Anything that increases this current account is supposed to be recorded on the credit side. Anything that decreases it, we are going to record on the what? On the debit side. Okay, fine. Let's look at the entries that were given. We are given the opening balance for Gray on 1 March 2020. Okay, fine. 2020 March 1 balance brought down for Gray, and then the amount that is given there is 22,000. Favorable. If they say it's a favorable balance, it means it's appearing on the credit side. Owner's equity is favorable on the credit side. Okay, fine. For Simon, they said the balance is unfavorable, so it means that it's going to appear on the debit side. Okay, so I'm going to indicate 2020 March 1 balance BD, and then the amount is 14,000. This is an unfavorable balance. Why is it unfavorable? Because you can even see the way I've recorded on the debit side. Okay, it's a negative balance. All right, fine. Let's identify the other transactions that are given that actually do affect our current accounts. Okay, we are given information on number 3. The partnership agreement provides the following. The salary to Gray is 11,000 per month. The salary to Simon is 10,000 per month. Okay, we calculate the salaries per annum, is it? So we need to find out how much is the salary for Gray per annum. We multiply by 11,000 times 12. It will give us something like 132,000. So here I'm going to indicate salary. Okay, also indicate Gray 132,000, and then I'm also going to come here and indicate salary. Okay, this one is for Simon, and then I'm also going to indicate how much is it. It's 10,000 multiplied by 12. Of course, if there is no other adjustment, it simply means that, okay, fine, the amount is going to be 120,000. Okay, we have recorded the salaries. Why the salaries on the credit side? The salaries, they increase the current accounts. The salaries, they increase the equity of the partners. Okay, that is why they are recorded on the credit side. Okay, fine. Let's look at another item. We've got interest on capital at 10% per annum. Simon had increased his capital by 80,000 halfway through the year, the financial year. This has not been recorded. Okay, to mean that this capital that we are given for Simon, 300,000, the 80,000 has not been recorded, okay? So it means throughout the capital had been 300,000, the 80,000 we have to now cater for it as we do our calculation. But for the first one, the capital for gray is 500,000, nothing changed. So we are going to say 500,000 multiplied by 10%, which is equal to 50,000. This is for gray, okay? And then for Simon, we are going to say the 300,000 multiplied by 10%, which is going to give us something like 30,000, okay? And then now we record the 80,000, which they mentioned here, which was not recorded, is it? Halfway through the year, okay? So we are going to say 80,000 multiplied by 10% multiplied by the half of the year, is it? Which is going to give us something like 4,000. Therefore, the interest on capital for Simon is going to be 34,000. Okay, fine. Let's record the interest on capital. Interest on capital. Okay. For Gray, the interest on capital is 50,000. And then the interest on capital for Simon, it is 34,000. I've shown you the calculation there. It is actually 34,000. Okay, fine. What else do we still have on number 3? What other items are we supposed to record that affect our current account? Okay, so the interest on capital, the salaries to partners, they increase the current accounts. What is it that decreases our current account? It is the drawings, is it? Are we given the drawings? Okay, let's move up to number 1. We've got the drawings for Gray, they are 110,000. Drawings for Simon, they are 100,000. And we have got an adjustment in number 2, bullet number 4. Trading stock taken by partner Gray on 20th February 2020. The selling price was 2,400 and the cost price was 1,800. So this is also going to affect the drawings for Gray at cost price. So we are supposed to adjust for that. Okay, drawings, they decrease the equity or they decrease the current account. Automatically, it means that they are supposed to be recorded on what? On the credit side. Okay, fine. On the debit side, sorry. Okay, so here we are going to indicate 2021. Okay, then the February 2028. Okay, and then we indicate our drawings. Okay, we are going to open a bracket here because remember there's that 1,800 which is going to affect the drawings for Gray. Okay, the drawings that are given here for Gray, they are 110,000. So we are going to say 110,000 plus 1. Okay, since, okay, fine, they said trading stock by a partner, the selling price was 2. And then, okay, so it is going to increase these drawings. Okay, so when we add these two amounts, we are going to get something like 111,800. 111,800. Okay, these are our drawings. Let's look at the drawings again for Simon. Okay, for Simon, the amount that is given there, it is 100,000. I don't see any other adjustment which is there. So we are simply going to indicate that okay, 2021 is February 28, and then it's drawings. Okay, and then the drawings are 100,000. Okay, what else are we supposed to record? Okay, so far what I can say is that, let's say for example we're doing the notes to the financial statements. What we have just done so far on the credit side is the primary distribution of profit. We indicated the salaries, the interest on capital. What is left is for us to do the final distribution, and the final distribution is done in the appropriation account. So we need to indicate appropriation, okay, and then appropriation. Okay, first of all, now we need the net profit, the corrected net profit. Let's look at the net profit that we are given. The net profit that we are given, okay, is 420,000. Okay, and then there are items on number 2. They are saying the bookkeeper calculated the net profit to be 420,000, but the following adjustment had not been recorded. The first adjustment is saying bank charges per the February 21 bank statement, it was 800. Bank charges are actually expenses. Okay, if they were not recorded, if we record them, they are going to bring a minus 800. Okay, let's look at the other adjustment. Interest on fixed deposit per February statement was 1,300. A fixed deposit is an investment to the business. Interest on fixed deposit is interest income, which is going to increase our profit. Okay, 1,300. Okay, now we move on to depreciation of equipment at 10% on the diminishing balance method. Okay, the equipment is given at 150,000. We are using the diminishing balance method. The diminishing balance method says cost minus accumulated depreciation is equal to carrying value. When we get the carrying value, we multiply by the 10%. Okay, how much is the cost price? It's 150,000. Okay, minus the accumulated depreciation, which is 65,000. Okay, it will give us something like 85,000 times 10%. It is going to give us depreciation of 8,500. Okay, what is the effect of depreciation on the profit? It is an expense, so it's going to be minus 8,500. Okay, so these are the adjustments that we have for the net profit. Now when we solve everything, we are going to remain with something like, let me calculate and find out exactly how much do we remain with. We are going to remain with 412,000 as the correct net profit. The correct net profit is 412,000, which we are now going to use in the appropriation account. So in the appropriation account on the credit side, we indicate profit and loss, and then the amount is 412,000. Okay, this is the profit that we are supposed to appropriate. Okay, first of all, remember what I said. The primary distribution is made up of the salaries. Okay, salaries for the first one is for Gray, and then salaries we also have Simon. Okay, and then we have got interest on capital. Okay, the interest on capital. Okay, fine. So adding, we don't have any bonus. So these will give us the primary distribution. After the primary distribution, then now we can calculate the final distribution, the amount which they are going to distribute using their agreed profit sharing ratio. So the salaries for Gray, we said it was 132,000. Okay, the salaries for Simon, we said it was 120,000. Okay, the interest on capital, we have got 50,000 for Gray plus 34,000 for Simon, which will give us 84,000. Okay, so the primary distribution is done. Our next step is now to say the profit and loss minus all the money for salaries and all the interest on capital, so that we can distribute it now in the current account using the profit sharing ratio. Current account Gray, current account Simon. Okay, let's find out exactly how much. First of all, we need to find out how much money was left after the primary distribution. So we are going to do this calculation. We are going to say the profit 412,000, and then we are going to say minus, okay, 132,000 for the salary, plus 120,000, plus also the 84,000. Okay, if we say 412,000 minus all this, we are going to remain with 76,000. 76,000 is the money that we are now going to use to do the final distribution using this profit sharing ratio. Remaining profits are to be shared between Gray and Simon in the ratio 3:2. Okay, so we need to distribute this money 3:2. Remember, when you are working with a ratio and you want to distribute, the first thing that we do is to add the ratio, which will give us 5. So Gray is going to get 3/5, and Simon is going to get 2/5 of the 76,000 times 76,000 times 76,000. Okay, let's find out how much you get. 3/5 times 76,000. We are going to remain 3/5 times 76,000. We are going to remain with 45,600. 45,600. 2/5 times 76,000. We are going to remain with 30,400. 30,400. Okay, so we are done. with the final distribution. We now come back to our appropriation account. We record that final distribution. Gray received 45,600 of the final of the remaining profits, and Simon received 30,400 of the remaining profits. Okay, so once we are done here, it's 412,412,000. All the distributions have been done. Okay, so we have done the partnership accounts, okay, and the distribution of profit, the current accounts, and the appropriation account. Okay, here the current accounts, we have done them using the ledger accounts. But when we do the statement of financial position, we also have got notes for the current account. And the presentation, the amounts will be presented. The amounts that I've presented here are the same amount that you actually show again in the current account section of the statement of financial position or the notes to the financial statements. This is all for this question activity 2, SG traders. Okay, thank you.